He observes, and he acts decisively when opportunities are clear. His patience compounds, his understanding deepens, and his financial position strengthens precisely because he refuses to be swayed by temporary chaos. This mindset carries into asset allocation as well. He doesn't blindly diversify but focuses on assets that he understands deeply, ensuring that even in the worst downturn, his exposure is calculated and controlled. Contrast this with the average investor who spreads investments too thinly, often losing track of underlying risks. Buffett's approach also hinges on long-term thinking. He famously quips that his favorite holding period is forever, which underscores a principle most people ignore. Time in the market is far more critical than timing the market. Holding strong, resilient businesses through downturns allows compounding to work its magic uninterrupted. Moreover, his approach to buying during downturns is methodical, not opportunistic in a reckless sense. He studies valuations, evaluates competitive advantage, and only commits when risk-reward dynamics are overwhelmingly favorable. This requires patience, discipline, and above all, a temperament that can embrace discomfort without panic. And while cash is often vilified as unproductive in investing lore, Buffett treats liquidity as a tool, a buffer that allows action without desperation. He maintains substantial reserves so that when others are forced to sell at distressed prices, he can step in confidently. This strategy turns fear into advantage, which is a lesson that extends far beyond investing into everyday life. Preparation, prudence, and understanding create opportunity amid chaos. Emotional control, by the way, isn't merely a nice-to-have, it's essential. Markets are influenced not only by economic factors but by collective psychology, which can be irrational, volatile, and unpredictable. Buffett's success stems from recognizing that the only controllable factor is his own response. When fear grips the masses, he maintains perspective. When greed dominates, he resists temptation. This disciplined equilibrium forms the backbone of his resilience. And yet, the real genius of his approach is adaptability within principles. He doesn't abandon his strategy for short-term fads but remains vigilant, continuously evaluating businesses, opportunities, and market shifts. He's a student of both history and present conditions, leveraging lessons from past crashes to fortify his strategy for the next one. This iterative refinement is subtle but powerful. Survival isn't about rigidity, it's about principle-driven flexibility. Beyond investing mechanics, Buffett also emphasizes the importance of reputation and integrity. He selects partners and managers who share his values, understanding that in times of crisis, trust and reliability are as critical as cash flow. A poorly aligned team can destroy even the most carefully constructed portfolio during stress. This holistic perspective, combining financial analysis, psychological control, ethical alignment, and operational resilience, explains why Buffett not only survives crashes but frequently emerges stronger. His strategies aren't just about wealth, they're about cultivating a mindset that views adversity as opportunity, discipline as power, and patience as a compounding force. For viewers following this journey, applying these principles can start with small steps. Audit your investments, prioritize understanding over speculation, maintain liquidity for opportunity, and cultivate emotional resilience. Ask yourself, how would your portfolio fare under extreme stress? Would panic decisions erode your gains, or would you have a Buffett-style margin of safety in place? It's practical, actionable, and entirely within reach if approached with intentionality. And remember, engaging with this content, subscribing, and commenting isn't just about consumption, it's about embedding these lessons into your own decision-making framework. How you react in times of market stress will define your long-term outcomes more than any short-term gain. This aligns with Buffett's enduring wisdom. Preparation, patience, and perspective are far more powerful than prediction. Observing Buffett's approach also highlights a crucial contrast between knowledge and wisdom. Knowledge is knowing the stock prices, charts, and ratios. Wisdom is understanding business quality, management integrity, and the durability of earnings. The average investor may possess knowledge, but the disciplined application of wisdom is what allows one to survive and thrive when the market crashes. Buffett's strategy layers all these elements seamlessly: rigorous evaluation of business fundamentals, disciplined patience, emotional mastery, liquidity preparedness, and ethical alignment. Each component reinforces the others, creating a system that doesn't rely on luck, timing, or intuition alone. It relies on repeatable principles applied consistently over decades. In practical terms, when the next crash strikes, investors who mimic these strategies won't just endure, they'll have the capacity to purchase quality assets at discounted prices, strengthening their positions while others succumb to fear. Buffett essentially converts panic into opportunity, volatility into advantage, and discipline into wealth. And this is why studying his methods isn't just academic, it's transformational. Understanding his mindset allows one to build resilience not only in investing but in decision-making, risk management, and long-term planning. Each principle, from margin of safety to circle of competence, serves as a tool to navigate uncertainty with confidence. Think of it as constructing a mental and financial framework designed to absorb shocks, exploit opportunity, and sustain growth regardless of external chaos. Another remarkable facet is the avoidance of complexity for its own sake. Buffett consistently opts for simplicity where others are seduced by complexity. He focuses on businesses whose operations he understands and avoids speculative or exotic instruments that could implode under stress. This approach highlights the enduring power of clarity. Understanding what you own and why allows decisive action when emotions run high. He pairs this clarity with opportunism grounded in prudence. While most investors wait for confirmation from market trends or succumb to herd behavior, Buffett studies value, waits for distressed opportunities, and acts decisively. This interplay between patience and readiness is subtle but critical. It transforms waiting from passivity into active strategy. And while much of this may sound like textbook investing advice, it's the disciplined integration of these behaviors that produces extraordinary outcomes. Emotional control, business understanding, liquidity management, long-term thinking, and ethical alignment together form a coherent strategy that thrives under conditions where most falter. The psychological lesson is profound. The ability to maintain composure, clarity, and discipline in times of stress is far more valuable than any short-term insight or prediction. It's the quiet mastery of principle over panic that creates enduring advantage. In fact, one could argue that Buffett's greatest asset isn't cash or stock, it's temperament. A calm, rational mind amid turmoil can see opportunities invisible to the fearful or greedy. This mental resilience, cultivated over decades, acts. Imagine navigating a financial storm while everyone else is panicking, watching markets tumble and news feeds explode with fear, and somehow, you not only survive but thrive. That's exactly what Warren Buffett has mastered, and today we're going to peel back the curtain on the strategies that have allowed him to remain unshaken through decades of crashes and recessions, from the market crash of 1973 to the global meltdown in 2008, and the uncertainty looming over the next inevitable downturn. You might wonder, how does one person remain calm when chaos seems to dominate every corner of the financial world? The answer isn't about predicting the future or timing the market perfectly. It's about principles, mindset, and behaviors that most investors overlook because they're caught up in short-term noise. Buffett famously said, "Be fearful when others are greedy and greedy when others are fearful." And this isn't just a catchy quote, it's a philosophy that has tangible, actionable steps behind it, steps that anyone can start implementing today. It begins with understanding what he calls economic moats, the durable competitive advantages that allow a business to maintain profits and withstand downturns. Unlike the general investor who chases trends, Buffett looks for companies that can survive adversity, companies that have strong brand loyalty, exceptional management, and predictable cash flow. It's not glamorous, it's not fast, but it is consistently effective. This approach forces us to shift our perspective from short-term volatility to long-term value, a mindset echoed by the likes of Charlie Munger, his longtime partner, who often reminds us that the big money is not in the buying and selling, but in the waiting. Waiting isn't passive, it's a strategic discipline, a conscious decision to prioritize patience over impulse. Another secret lies in Buffett's obsession with understanding risk. While many fear loss, Buffett measures risk in a very different way. He asks, what could go wrong with this business, and how badly? It's a qualitative, rigorous assessment rather than a mere statistical calculation. He looks beyond market swings to the underlying strength of the companies he invests in, which is why Berkshire Hathaway's portfolio often seems impervious to panic, because the assets themselves are resilient. This principle is tied to the idea of margin of safety, a concept borrowed from Benjamin Graham, Buffett's mentor, which emphasizes buying assets at prices significantly below intrinsic value. It's like building a fortress around your capital. If you purchase wisely, even a severe market crash won't erase your gains. And while the world obsesses over daily market movements, Buffett's strategy thrives in the calm, deliberate evaluation of businesses' true worth. There's also a psychological element here. Buffett's secret is deeply rooted in emotional intelligence. Most investors crumble not because of financial missteps, but because fear and greed dominate their decisions. He maintains equanimity by viewing the market as a tool, not a tyrant, a medium through which disciplined, rational choices can compound wealth over decades. He treats volatility not as an enemy, but as an opportunity, a perspective that often feels counterintuitive when headlines scream doom. Consider how he approaches diversification. Buffett doesn't scatter investments indiscriminately. He concentrates on what he understands deeply. This selective focus allows him to navigate downturns with clarity rather than distraction. It's reminiscent of Sun Tzu's wisdom that victory comes from careful preparation and understanding of the battlefield. Buffett studies the financial landscape, identifies sturdy companies with loyal customers, and ensures that each investment has the resilience to withstand shocks. And while all of this might sound complex, the simplicity of his principles is what makes them so powerful. Buy great businesses at reasonable prices, don't panic when the market drops, and hold for the long term. Yet, beneath this simplicity lies a profound discipline, an almost meditative approach to wealth accumulation. Imagine a market crash hitting tomorrow. The majority of investors are likely to sell in fear, but Buffett's portfolio, built on fundamentally strong companies, not only survives but positions him to acquire even more value at discounted prices. He effectively turns panic into opportunity. This philosophy also emphasizes liquidity, not in the sense of holding endless cash, but ensuring that investments are structured to endure crises without forcing the owner into a fire sale. He avoids debt traps, ensures ample reserves, and prefers businesses that generate robust, predictable cash flows. These choices protect him when the world panics, and they give him leverage to act decisively when bargains appear. Buffett's strategy isn't about speculation, it's about preparation. Think of it as building a ship designed to weather storms rather than chasing every wave. And this strategy is timeless because it doesn't rely on market timing or luck. It relies on human psychology, rigorous analysis, and the patience to wait for the right opportunities. His approach reminds us of the words of Marcus Aurelius, who said, "You have power over your mind, not outside events. Realize this, and you will find strength." Buffett exercises this power every day by controlling his response to market turbulence, letting reason guide him rather than emotion. Another layer of his secret is the relentless focus on understanding the businesses themselves, not their stock prices. While most investors obsess over tickers and charts, Buffett reads annual reports, studies business models, evaluates management quality, and assesses competitive advantage. He invests in what he can comprehend thoroughly. This principle, sometimes called circle of competence, underscores that survival during a crash isn't about knowing every market nuance, it's about mastering what you do know. When the next market crash arrives, history suggests it will be brutal for those who chase trends or panic. But Buffett's portfolio is designed to be shock-proof, to resist fear-driven selling, and to capitalize on fear in others. He views downturns as gifts, discounted entry points into high-quality businesses. And here's where the broader lesson becomes clear. His approach isn't exclusive to billionaires. The underlying principles, patience, rational analysis, focus on quality, emotional discipline, are accessible to anyone willing to adopt them. One could start today by auditing their own investments, questioning whether they truly understand what they own, whether each asset has a margin of safety, and whether their strategy accounts for the inevitable downturns. In essence, Buffett's secret is a blueprint for mental and financial resilience. And while we're dissecting these strategies, if you haven't already, hit that subscribe button, because exploring insights like these could completely transform how you think about money, markets, and risk. Share your thoughts in the comments. How would you react if the market crashed tomorrow? Do you think you'd panic, or could you apply a Buffett-like calm? Engaging with this content now isn't just passive learning. It's building your own mental and financial preparedness. What makes Buffett's method so fascinating is its counterintuitive simplicity. While others chase short-term profits, he wa